Today we're going to look at gold from a wealth cycles perspective. Today is Friday, October 25th. Everybody is talking about gold. George Gammon called it the asset of the coming decade. I assume he meant coming, but we're going to take a look at that. So what we're looking at here is the price of gold zoomed out as far as we can possibly zoom out. You'll notice the price chart goes back to 1883. Here we're looking at every candlestick being a yearly bar, but we're going to apply the wealth cycles view, the wealth cycle strategy, and try to get a clearer sense of where we are in the gold market. All right, so first we're going to start with the Dow gold ratio. So we're going to take the Dow Jones and divide it by gold. We do get data back to 1897, which is pretty good, but there's data going back even further. This chart here shows us the longer term trend back to the year 1800. So this gives us almost 100 years more data, which helps us identify the basic trend, because if we just look at the chart here, it's a little bit hard to tell what's going on. But the other chart I just showed you tells us that we have a trend going on, something like this. First thing I try to do is identify the length of the cycle. So I measure from peak to peak. It's approximately 37 years. Peak to peak here is approximately 34 years. This one here, I'm going to take from the center of this bottom and not the actual nominal low. And I'm going to get about 43 years. So that gives me an average of approximately 40 years. So then in order to smooth out this price action and get a clearer view of the actual cycle without all the short-term noise, I take a simple moving average that is 1/4 of the cycle length and offset it by 1/8 of the cycle length. In this case, because it's a 40-year cycle, we have a length of 10 years and offset it by 1/8 of 40 equals -5. And that overlays the simple moving average right over top of the price action and gives us a much clearer view of the inherent cycle without the short-term noise. And then what I do is I just take and manually draw those lines out so that they're a little bit more ideal. And that's what we get here. Sorry, the blue line here is what I'm talking about. And so I'm going to extrapolate out now. Okay, so it looks like we have a few data points telling us that we have a 40-year cycle. I'm going to draw that out here, right? So what happened, it appears, now this is open to interpretation. You may have a different interpretation. This is just kind of how I'm viewing it. What appears to have happened is that we had a very early, so this is a gold peak here. Looks like it was about 7 years too early. And then we got this huge bounce when we should have been bottoming. And so I suspect we'll see some kind of double bottom here with a peak, which would imply that the Dow will crash relative to gold slightly more. It's also possible that we just go sideways all the way out until approximately 2033, or sorry, 2033, because we have to kind of conserve that energy there. Assuming this cycle holds. So this would imply an anticipated double top in gold here relative to the Dow at least, but maybe we can get some more clarity by doing the same thing with some other charts. So let's take median household income and divide it by gold. Now, when we do that, we don't get very much data. We only go back to 1984, so it's impossible for us to determine any cycle here. I've dug up some data going back to approximately 1920. Each of these green rectangles is a data point 5 years apart. So this green one here is 1980. This one's 1975, 1970, 1965. Each green bar represents a data point every 5 years, which was enough, even though it's not very granular. We don't have a lot of data. It's enough for me to have identified a clear cycle here, right? We have a clear low, a clear high, and a clear trend line between both ends of the channel. All right. So again, this is open to interpretation. Perhaps you interpret it differently. But what I see here is that we are at the very bottom of a cycle low in median household income relative to gold. That means incomes are very low relative to gold, or gold is very high relative to incomes. We get that same kind of looking thing here where it looks like we had an early peak in gold back in 2011 when it should have peaked in approximately 7 years later, which would have been 2018, 2019. And we had this bounce very similar to what we saw in the Dow gold ratio, bouncing when we should have been bottoming. So right now we're in the situation where we had an early peak in gold followed by a very late peak in gold. You can see here in 2024, actual price action is trending in the opposite direction of the cycle. So that implies a fairly violent move in the opposite direction in the near future. Now, keep in mind, this is a yearly chart, so these things happen very slowly. But this kind of corroborates what we saw with the Dow gold ratio, with something of a double peak in gold. This also corroborates with what I see and hear on the streets in the economy, with with incomes being very low. Right? There's labor shortages because prices are too low. That's what a shortage is. Shortages are cured by higher prices. So we need to see higher prices in wages. We're at an absolute rock bottom in wages relative to gold, and in approximately 10 to 20 years, we'll be topping out with high incomes relative to gold, or that could also imply that gold will be bottoming over the next 10 to 20 years. But it looks here like we'll see a pretty violent move in either incomes or gold. Now let's look at median home prices measured in gold. We do the same process here. Again, it doesn't look like we have about 1.5 cycles here. It's a little bit hard to get any good data from that. So I mined up a little bit more data here. Same thing. These orange circles are one data point every 5 years. Going back to, I think I went back to 1925 or 1920. But, I mean, even though that data is not very granular, it fits our cycle perfectly. I mean, that is good enough for me to at least confirm the cycle. I'm not sure if it's an increasing trend line or a sideways, I should say, channel. But for now, this is good enough. And this shows us kind of a similar story. So again, this is telling us that gold peaked in 2011. That was too early, again, by about 7 years or 8 years. This is the third chart that might suggest that. And because we bounced when we should have been bottoming, we're seeing a secondary, we'll call it a gold peak or a bottom in housing. Looks very similar to the income to gold ratio. This suggesting that this is a double peak in gold. When when the cycle is turning upward and we're moving in the opposite direction, that implies a pretty violent move in the opposite direction over the coming, we'll say, 10 years. Again, these are very slow cycles, right? These are big picture. So this is the second good chart that implies a gold peak. The Dow gold ratio wasn't quite as clear. The gold silver ratio is not quite as clear in terms of identifying any kind of cycle. And apologize, this chart is a little bit sloppy. We have good data here. This data is pretty sporadic, but we got this moving average, which kind of averages it out for us here in purple. The red and the blue are my attempt at copying this data from a different website. I think it was longtermtrends.net. Anyway, not such a clear pattern going on here, so we're going to just kind of put that one aside for now. Now let's look at oil divided by gold. Now this chart doesn't really grant us any particular cycle, but it does give us a very clear channel. So even though maybe this one's not such a cyclical relationship, it does suggest that oil is very low, extremely low relative to gold, or gold is extremely high relative to oil. So there's another asset, that would be 3 out of 4, giving us strong indications that gold is peaking right now. Here we have feeder cattle divided by gold. Possibly got some cycles going on here. I haven't yet mined the data going back historically, but the cycle periods line up with the previous charts, with gold having a peak in 1980, gold having a low in 2001, peaking in 2011. So until I can get that data, I'm going to go with this pretty clear cycle here that lines up with some of the other charts that we've seen. This one also implying a double peak in gold, but looks like that peak happened more in 2020 when feeder cattle crashed. Looks like we're getting a little bit of a pullback here. I feel like we're kind of done with that move. It looks like cattle are going to be going higher relative to gold. So I'm going to say this one here is also suggesting that gold is at a relative high peak right now. Now what we're going to try to do is to estimate some future prices. Now, again, we're trying to estimate future prices as measured in dollars. Dollars are a poor measuring stick, and that's the whole reason why we're doing this wealth cycles concept. But assuming the supply of US dollars remains at a constant growth rate into the future, we can generally sort of estimate, at least corroborate and plug in some numbers and try to get a sense of what could happen here. So here we have median home prices, and this tends to follow a pretty straight line, a pretty consistent trend line over time, whereas gold tends to look a little bit more cyclical. And so if we just take this trend line and extrapolate it out to the mid-2030s, we get somewhere approximately, let's say, $650,000 for the median home price in the mid-2030s. Now, if we plug that into our median sales price divided by gold, if we got to the top of this cycle here, homes would be $650,000. That would imply gold is $1,000 an ounce. It kind of blows my mind that that is possible. So let's, and I think that would blow most of the gold investors' mind as well. And I don't think anybody would really want to believe that to be the case at this point in time, because everybody is super bullish, obviously, because the price is skyrocketing finally after years of having done nothing. So let's try to corroborate that. Is $1,000 an ounce really possible? So here's median household income. I've just drawn a very arbitrary straight line, kind of following the trend because it seems to follow a fairly straight line. So let's just use that as a rough estimate. And let's say in the mid-2030s, we see a price something like $140,000 being the median household income in the U.S. If we take that and divide it by gold, plug it into our cycle here, we would see gold at $1,000 an ounce again. And that actually would not be out of the question if we saw something way up in this area. It appears that that's been the top at least 1, 2, 3 times. But this is showing me that gold, $1,000 an ounce, is not out of the question. At least those charts would corroborate that. Let's try oil. If gold hit $1,000 an ounce, that would imply $120 oil in the mid-2030s. Now, again, that can happen for a brief moment. That can happen for a year, a couple years. We don't really know. We're just trying to get a sense of direction here. $120 a barrel oil equating to $1,000 gold would put us at the top of the channel. Let's see what that would look like on the oil chart. Right here's about 120 at the top of this red box is about 120. Now, that's not to say we can't go up, down, and all around before then. It's just to sort of corroborate whether or not it's in the realm of possibility, and this appears to be in the realm of possibility. And, of course, we're measuring this in dollars, and we don't know what's going to happen with dollars. Are we going to see massive inflation, periods of deflation? That's a little bit harder to say, but if we just follow the cycles, we'll generally put ourselves in the right spot being invested in various assets. Unless the central banks change their mind and allow massive deflation, it appears that the dollar is generally not going to be a place that we want to be. The dollar is where we want to be in a deflationary environment, but again, it doesn't appear to be on the table for very long at least. Let's go back to feeder cattle and what would happen if we went to $1,000 gold. That would put us about here. That would mean cattle would have to be at 180 feeder cattle. That would put us here around the peak of the cycle, more or less. Let's see if that corroborates. Draw something like this, right? Mid-2030s at 180 would put us here, certainly within the realm of possibility. So it appears to me that gold is very much at a peak relative to everything I've measured except stocks. Let's check the gold-silver ratio. So this would imply that gold is very high relative to silver currently. If we go out to the mid-2030s, if the gold-silver ratio stays right where it is until the mid-2030s, $1,000 gold would equate to $12 silver, which is about a third of where silver is now. So that's a 66% decline in silver from current prices, roughly. So as far as I can tell on the gold-silver ratio, it's fairly unpredictable. If you think you can see something in this, let us know down in the comments. Silver is incredibly volatile, seemingly unpredictable. It has some correlation with gold, but it seems like over the long term, it's losing its value relative to gold. I even wonder if it's foreseeable that this ceiling here breaks sometime as the gold cycle bottoms. But then again, if we see some kind of black swan event that would stimulate extreme monetary demand for silver, I mean, who knows? This ratio could revert back to the 15-to-1 historical level. But we have to be resilient to those black swan events, but I don't think we necessarily want to bet on them because we can't predict them by their nature. So let us know down below your thoughts on the gold-silver ratio. As far as I can tell, I haven't had any strokes of inspiration yet. So in conclusion, we measured gold relative to other major assets like income, housing prices, oil, stocks, feeder cattle, and I would say that 5 out of the 6 charts, or 4 out of the 5, whatever, showed that gold is at some sort of peak right now. My interpretation is that we're at a double peak. We saw an early peak in 2011, and now we're seeing a late peak in 2024. I think it's reasonable that we see a correction, possibly down to $1,000 an ounce gold by the mid-2030s. I think unless we see extreme inflation like that completely destabilizes the currency, that's within the realm of possibility. And I see a lot of irrational exuberance about gold going to $10,000, $20,000 an ounce. That to me is a sign of a peak. So again, we're looking at a yearly candlestick chart. So in the short term, I mean, a blow off top can do all kinds of crazy stuff. I mean, now in the short term, how high gold goes is anybody's guess. All of the wealth cycles charts would break if this went to $10,000 an ounce, unless everything else also went up by a factor of 3. That's not incredibly likely in the short term. We could see gold $3,500 an ounce theoretically. But if I owned any gold, I would be selling all the way into that and fading out just strictly on what the cycles are telling me. This isn't my opinion. This is just my interpretation of the charts and the cycles. Let me know in the comments what you think. What's your interpretation? Give the video a like, subscribe if you appreciate this content. Thank you.